Turning to our results, clients have always been at the center of BlackRock's growth strategy. I believe that BlackRock is better positioned today than ever before to help our clients achieve the long-term outcomes they need. We are having comprehensive conversations with clients globally on how we can partner with them to navigate on a new market regime and capitalize on investment opportunities. BlackRock is uniquely positioned in this environment to serve our clients with an integrated advisory, investment management, and technology expertise, something no other asset manager can provide. Sustained organic growth and market appreciation has led to a $1.1 trillion increase in BlackRock's AUM, alongside margin improvement and 14% growth in earnings per share over the last 12 months. Clients have entrusted us with over $300 billion in net inflows over the same time period. Technology service revenues increased 20% year over year, reflecting sustained demand for Aladdin and eFront renewals from several large clients. We remain committed to delivering differentiated organic growth and margin. We've invested ahead of major opportunities for BlackRock in private markets, technology, and whole portfolio solutions. Through disciplined execution, we aim to both grow client assets and drive profitable growth, unleashing financial success for our clients alongside revenue and earnings power for our shareholders. Structural and secular changes in business models, technology, and most of all, monetary and fiscal policy have made the last 2 years extremely challenging for traditional asset management, with a majority of industry players seeing outflows. BlackRock's differentiated business model has enabled us to grow consistently with our clients and maintain positive organic base fee growth since 2022. Investors face continued uncertainty. The S&P saw its best start through July in 26 years, but retreated in August and September. Central banks are being forced to keep policies tight as they lean against inflationary pressures. 2- and 10-year treasuries climbed to 16-year highs as investors anticipated rates remaining higher for longer. Rapid advancements in technology and artificial intelligence, the rewiring of globalization, the transition to a low-carbon economy, aging populations, and a fast-evolving financial system are all macro trends clients are evaluating. As market dynamics shift and uncertainty increases, clients are pausing to think about the future, assessing their options, and seeking out BlackRock to take action. BlackRock's quarterly net inflows were not immune to an overall industry slowdown, as Martin discussed. Of course, I'm disappointed when we have softer flow quarters, but the long-term trends of clients consolidating more of their portfolio with BlackRock is only accelerating. Rate hikes over the past year and a half, the fastest in the U.S. since the early 1980s, have made cash not just a safe place, but now a very profitable place for investors to wait for the time being. In short, investors are being paid to wait, something we haven't seen to this degree in years. Investors can earn 5 to 7% from conservative cash and bond portfolios. This dynamic reduces the near-term incentive to implement portfolio changes, resulting in temporarily slower client activity and inflows. The degree to which investors have hunkered down in cash is shown by nearly $7 trillion in money market funds, AUM, across the industry. Investors will eventually put that money to work. We've seen this dynamic before, as recently as 2016 and 2018, when policy uncertainty and the ability to earn yields in cash resulted in temporarily slowing in activity. Through these times, BlackRock stayed connected with our clients, connected across our businesses. And what immediately followed those periods in the past were new records for BlackRock client flows and organic base fee growth at or above 5% target. We expect that investors will begin redeploying assets once there's a conviction in a terminal rate and the shape of the yield curve. We've seen that effect play out in prior cycles, most recently following the Fed pause in 2019, when flows rebounded, particularly in fixed income. BlackRock's integrated platform and deep, long-standing relationships with clients position us to be a major beneficiary once flows return. We are the only asset manager delivering our platform as a service. Clients entrust us with $9.1 trillion in assets, and we are serving them with excellence. We lead our industry in delivering accessibility, affordability, and innovation. Times of uncertainty are often when transformational opportunities emerge. Moments in our history like this have led to new ideas, led to new partnerships and acquisitions. BlackRock has a strong track record of successful transformational M&A. Most people think of BGI and MLM when I say that, but I also think of acquisitions like eFront and Aperio. They have been smaller in size, but were also transformational in their own way. In both, we anticipated and delivered on our clients' needs. We scaled strong existing technologies and built new revenue streams for our shareholders. Organic growth in Aperio has been over 20% since our acquisition, and eFront revenues have grown nearly 50%, while also strengthening our value proposition and positioning in Aladdin and private markets. BlackRock has been a successful acquirer, and today advancements in tech and AI, scaling of private markets, and more attractive valuations means BlackRock is once again becoming increasingly engaged in M&A discussions. What made our acquisition so successful was our enduring commitment to fuse the best of the acquired companies into a stronger and faster growing one, BlackRock, fully connecting all parts of the firm to our clients. We have a proven history of realizing long-term benefits in areas of expansion. Today, we're similarly connecting with our partners across markets to lay the groundwork for future growth. In July, we announced an agreement to form Geo BlackRock, a 50-50 joint venture with Geo Financial Services, an entity carved out of Reliance Industries. India has been an integral part of the global platform, and BlackRock is one of the largest international investors in India today. And almost 15% of our colleagues are located across multiple offices in the country. India offers enormous opportunities. Geo BlackRock represents a powerful new partnership in a fast-growing market where we see the potential to revolutionize India's asset management industry. We look forward to expanding our footprint with the ambition to improve the financial futures for millions of investors in India. BlackRock is working in India and markets around the world to lower the barriers to investing through accessible, affordable, and transparent solutions. Another example of the new growth opportunities is our partnership and agreement we announced last month for BlackRock to be the asset manager partner of Monzo. Monzo is the UK's leading digital bank, and we are launching a new investment offering for their 8 million customers. Since launch, more than 250,000 Monzo clients have joined the waiting list for this new offering. And just earlier this week, we announced our partnership with Upvest to drive innovation in how Europeans access markets and make it cheaper and simpler to start investing. What we have seen in the markets after markets is that we can make investing easier and more affordable, and we can quickly attract new clients. For first-time investors, the preferred way of investing is often through ETFs and specifically iShares. Through investment and innovation, we've evolved our iShares ETF franchise to meaningfully increase access to global markets. This includes access for tens of millions of new investors. It also includes access for our most seasoned clients to use our ETF technology to actively allocate across all types of markets. BlackRock's ETF platform delivers industry-leading performance, choice, and scale. With growing use cases, diversification, and customization, ETFs and indexes are often and increasingly an important component of active management. Across our ETFs, BlackRock generated net inflows of $29 billion in the third quarter and nearly $100 billion year-to-date. Flows in core equity and fixed income ETFs were partially offset by redemptions in precision ETFs in August and September, something we expect and have seen before in risk-off environments as clients use our ETF to actively manage their portfolios. These tactical allocation tools are unique to BlackRock, and they are high utilization reinforces the value proposition associated with the iShares' strong secondary market liquidity, its unique options, and lending markets. BlackRock's market-driven long-duration fixed income product we're also an important tool for investors to rotate out of longer duration positions. The breadth of our ETF platform enables us to capture changes in client demand, keeping investors within BlackRock. For example, Ishares treasury funds were 3 of the top 5 grossing bond ETFs in the industry as investors shifted duration preferences in the quarter. Our market-leading levels of performance and liquidity helped their clients nimbly reposition as market conditions evolved. As we approach peak interest rates, we expect a resurgence in fixed income flows with clients capitalizing on higher yields. BlackRock is well positioned to benefit from this reallocation with our comprehensive $2.6 trillion fixed income platform. Going back to the periods immediately following the taper tantrum in 2013 or the Fed pause in early 2019, the industry saw a quick rebound in fixed income flows following rate stability. Both BlackRock ETFs and our active fixed income funds were large beneficiaries at that time. Our conversations with clients aren't about just active and just index. We work with clients to understand their investment challenges, helping them shape and execute strategic portfolio construction decisions. BlackRock is the only asset manager that can deliver outcomes in the context of clients' whole portfolios across market classes, asset classes, investment styles, and in public and in private markets. Organizations are turning to the private markets with greater frequency for their capital and financing needs, leading to bigger and better investment opportunities for BlackRock and our clients. BlackRock's worldwide network of relationships with corporations and governments, sourcing capabilities, and a rigorous selection process helps us deliver unique solutions and drive performance for our clients across private market asset classes. In the third quarter, we announced that BlackRock is partnering with the New Zealand government to launch an over $1 billion climate infrastructure strategy. BlackRock's Decarbonization Partners joint venture also reached $1 billion in committed capital for its first round and has now invested in 5 portfolio companies. These initiatives are a real example of BlackRock's long-standing relationship with clients and how we deliver the entirety of our platform to pioneer solutions and meet our clients' evolving needs. We're also effectively scaling successor funds in private markets, delivering larger funds through raises of subsequent fund vintages. For example, we're on the 10th vintage of our flagship U.S. private lending fund, and we're in the market with a 4th vintage of our global diversified infrastructure equity fund series. Infra 4 already raised $4.5 billion in initial investor commitments at the first close last year, achieving over half its targeted size. This is the next phase of successful scaling of the franchise. In 2020, our third fund in the series raised a total of $5 billion, surpassing the total assets of vintages 1 and 2 combined. Strong investment performance is critical to this momentum. Our flagship private equity fund currently stands at more than a 35% net IRR. We've seen double-digit net returns this year in our flagship private credit strategies. BlackRock's proprietary differentiated deal flow is what drives long-term investment performance and outcomes for clients. BlackRock's global network of relationships, data, and analytics, and flexible, adaptable capital means we can source unique deals for our clients, and we are increasingly finding that opportunities seek us as much as we seek opportunities. Companies want BlackRock as an investor and a partner, recognizing the uniqueness of our global reach, our brand, and our expertise across markets and industries. Our growing profile from investments around the world in the U.S., in Europe, and Asia is leading to more and larger deal opportunities. BlackRock's global relationships and expertise in sourcing and underwriting, portfolio and risk management, and technology and analytics allow us to unlock unique deals for clients. At the same time, our growing momentum in private markets is delivering value for our shareholders through organic growth and less beta-sensitive revenues. Years ago, we anticipated how clients would benefit from alternative investments being evaluated inside a portfolio-level risk management framework. This led to the combination of eFront and Aladdin, which has set a new standard in investment and risk management technology. The acquisition of eFront opened up a new segment of alternative GPs and asset servicers, and most importantly, enabled us to help clients across their whole portfolio. Our acquisition and integration of eFront continues to be transformational for clients, and we're seeing strong demand both as a standalone basis and for whole portfolio solutions across public and private assets. We now have a data platform and business that covers 13,000 funds and over 150,000 assets, a significant portion of the private market fund universe. We're redefining the industry expectations of transparency in private markets. Nearly half of Aladdin's clients are leveraging our newer offerings, including eFront, which is a true competitive advantage in the tech market. And as Martin spoke to, you saw eFront's contribution reflecting in this quarter's tech results. Investors and advisors are increasingly choosing a small number of scale technology platforms that offer everything in their ecosystem in one place. Aladdin works seamlessly alongside other aspects of client investment processes and tech stack, serving as a foundation, while enabling clients to create custom solutions to meet their specific needs. To get here, we also have developed deep integration with custodial banks, with fund accountants, broker-dealers, and other leading ecosystem partners. This flexibility and choice are just some of the reasons clients are trusting us with a growing numbers of their portfolios. Going forward, we are confident that clients will continue to turn to Aladdin to unify their investment management process. BlackRock's willingness to reimagine our business, our ambition to partner comprehensively with our clients, and our drive to innovate ahead of their needs is translating into broader, into deeper relationships, and we see an incredible opportunity for us in front of us. We remain intensely focused on staying close to our clients, especially during periods of market volatility and rising uncertainty. Clients are coming to us for advice, for solutions tailored to this macroeconomic environment, wanting to do more with BlackRock. Horizontal connectivity is critical, and our leadership team and an entire organization are coming together to differentiate ourselves in delivering for clients today and preparing to capture the money in motion we anticipate in the near future. As I've always done, I'm challenging our teams to continue to innovate and stay perpetually neurotic about staying in front of our clients. BlackRock will continue to lead in creating more access and connections between long-term investors, capital markets, and the real economy. I'm incredibly excited about the opportunities I see for our clients, and especially for BlackRock, which will then lead especially for you, our stakeholders.